We are live. We're going to run another damage control simulation this session. And what we've decided to do is randomly chosen the US dollar Canadian in March of 2015, right? And this is how it looks from a weekly perspective. We have determined that we want to probably look for shorts longer term. The daily's kind of flat and has been ranging right into the averages. And the H4 shows that range a little bit better with a lower band down here and the upper band down here. So as a group, we've decided that what we're going to do is we're going to try and short pops into the upper band of the range. And if the range breaks in either direction, right, we'll determine whether we trend trade it in that direction or not. Okay, depending again on some of the higher time frames. So before we get into trouble, we have to find some setups. Yep. So what we're going to do is we're just going to run the simulator bar by bar before we actually get set up, because then we're going to have to set up the trade and see how that goes. Okay, so we're going to start by keeping the speed as it is, because again, we're going to be running through bar forward simulation for now until we get to either the upper band of the range or the lower band of the range to make a decision. This is the 4-hour chart. This would be an option to go long, but we're looking for shorts primarily or a break of the lower level there. What we could do before anyway is we can set up our levels, right? And that is something that we can do before as we're looking for trade opportunities here. We're probably going to want to have our levels set up anyway. So let's set up this level here as a desired short area. I think that I should change the color of the line. Let's see. Maybe we change to the traditional black and we make them a little thicker. Yeah, for the levels, and for the hedges yellow. Yep, that seems like something that we can do. Then this level here, that is another daily level. We are going to scrunch this up a little bit now. Well, it's historically high, right? It's historically high. You have to go pretty much a year. So let's set up those levels as well, so we get a good idea, right? We have these highs here, maybe there, more representative. Let's see if there's another level. These are key daily levels that we'll check, and then we can fine tune on the H4 if we need to. Trying to see if there's one down here based on maybe there. And then we'll see if it coincides with current price action. We're looking at what? 300 pips. We're going to have to find intraday levels, obviously. 300 pips there as well. Although this is the GBP, this is the US dollar CAD. 200 pips there. And we can always reference the daily charts on the simulator anyway. I mean, that seems to be a level there. All right, so let's leave it at that. Those are the levels that we've identified on the daily. Let's see if there's some intraday levels. Again, we were talking about a spread of from there to there, 800 pips, right? Things moved a lot in 2015. I don't know if you'll notice that, yeah, that NFP was 300 pips moves, right, every first Friday of the month, and it was a lot more of a volatile environment back in the day. So let's see. Let's look at the H4. We'll have to scrunch this up a bit as well to see if there are any levels that we like in between there in recent. There could be one there. There really isn't anything here, right? That's the issue. And we're not going to invent levels just because we want action. Yeah, there might be one there in between. That looks like a potential flip zone. We can always mark it, right? And we know that everything that we've marked is because there's something that we've seen. It's kind of in between, right? But there really isn't much else in between. And like I said, we'd have to go back a year on the H4 just to get intraday levels. So what we could do always is wait for price action to give us the levels, right? If we don't find anything that we like, particularly for charting purposes. Okay, because there's a level here in the middle, obviously, of the range, but this is a range, and trading in the middle of the range is not always a brilliant idea. So let's continue to move candle by candle here until we get a short that we like, because that's our bias. Or we can just play the range, because that daily, like I said, is really just rangy, right? We can play the range until it fails. Yeah, let's do that. So let's say that we like this lower band here, right? So basically, what you're going to do with range trading is you're going to try and see where your buys are going to be and where your longs are going to be, and not only delineate the highest point and the lowest point. You want to have points that are within a zone, because the ranges are hardly ever going to be working pip to pip from upper band to lower band. They're going to be, doing this here in the middle or reversing earlier, whatever the case may be. Yeah. So what we're going to do here is we're going to create a quick trade plan, because what we want to do is go long. So we're going to use 0.05s, and this is going to be our first buy, right? And we're just going to go ahead and take it. As our first buy, we're going to immediately set a take profit. Again, this has to be 500 and 500 for 50 pips, so I can visually see it. There. And for a range trade, you're going to probably want to hit that middle point, or as close to that middle point as you can, with where resistance seems to be averaging out. Yeah. So that would be about 80 pips for that trade that you want to take. Again, as a reminder to everybody watching, this is a simulator, and there's no simulation of sentiment. So we're kind of running on pure technical trading, and thus this is pure technical training. All right, so we've got a level here that we like. We could place another offer here, a buy limit, 0.05 for our buy limit as well. And those will be the two bullets that we'll take before damage control. And why is it so tight? Because this is a range trade. We're not scaling in. Yep. This is a range trade. And as soon as the range breaks, right, we are going to want to get out of it, because the trade idea will be invalidated, which means that we need a damage control trigger, right? In this case, we will change color for the DCT. Go with red, orange, and that's going to be our damage control trigger. And what we can do is put at the break of this line with momentum, right? So anything that significantly breaks that line. So it's going to pretty much be, the thing is, you got to be careful, because again, you've got the 55 DMA that could act as support, right? So let's say that a break of the 55 DMA, and we definitely have to get out. Yeah. So that's where we'll mark our DCT, because that's what we're going to track. And now we're just going to trade, right? Using the simulator, and basically we're going to try to see what this range gives us, and we will short it up there. Yeah. So we're going a bit against our weekly bias, but seeing how the daily is flat, it seems like a reasonable bias to try and take advantage of that range. What you do have to notice is that range has been going on eternally. right? And not only through here, it is a multi-week range, so this could end at any point. Yeah, so we might be very late to the party, and in that case, we could get into trouble, which will allow us to do the damage control that we want to do. So let's begin. I don't think I've forgotten anything. The trade plan is set. We know where our 2 bullets are going to be. Okay, at that point, up there, we're protecting. Yeah, right there. So what we can do, actually, sorry, whatever that was, is we're going to do the ITM here. So I'll place a stop loss, and I'm going to protect gains. Because as soon as I would see that close to target, man, that's a protection. There's nothing else that can happen there. Yeah. You raise the ITM to gain as much as you can, and boom, you're out of the trade. Okay, with a range trade, that netted us. Oh, let's get that little thing out again, up there. So $30. Where was that box? Let's see. Windows, statistics. Like I said, I haven't tried that indicator, but I think you said it didn't work anyway. Where was this? There. Keep that in the corner for now. Doesn't give us our drawdown. For our drawdown, we have to look at the open positions and look at the profit P&L. That's where the drawdown will be. That's a floating drawdown figure. Okay, so now we need to decide what we're going to do. So technically, this plan is done, and this should be scrapped. But let's say that we decide that we want to buy here again if it comes back down, even though ideally this should come up to the top part of the range, because if you're starting to see this, right, and you're not getting that range at the top end, right, there's pressure to the downside from a price action point of view, and maybe you don't want to get in, right? So what we're going to do, and let's do this exactly how I would do it. So let's not take shortcuts, right? I've got to go here to pending orders, and I got to delete it. And technically, we've got to delete our damage control line as well. Yeah. So now we're going to go bar by bar again until we get an opportunity and decide at either end of the range what we're going to do. Okay, that's still far off, maybe a little bit higher for us to short, or we can try to short there. I think I'm going to wait for a little bit higher since we've marked that band there and we've got highs there and there. The reference here is this one and this one. It is possible, right? So maybe what we can do for this plan, I'm getting a bit greedy, but it's okay. We can take a short here because that's our main bias, right? But we'll take a half a bullet, 0.03, because we're doing it ahead of where we would like, but we don't want to miss the opportunity of that sinking. So we're going to sell there. We're going to place a sell limit at the top for the rest of the bullet. Actually, for a full bullet, right? We'll do a bullet and a half plan. And this we will place maybe if we get to the top, right? If we see that this is going to break out or give us a signal that it's potentially about to hit the actual absolute, then we'll take that there. That is a spread of 90 pips. You would run your calculations, etc. Right? So you've got two positions there. The current sell needs a take profit, obviously. And we will look at support. So it's going to be around here. Support, right? A little bit of support there as well. That could give us, 100 pips, 110 pips, which would be nice. And then we're going to look at the damage control trigger for this plan. And it's a plan that is also range trading based, but, right, it is also all-time, it's kind of like multi-year highs in this case. So we're not going to have a lot of references, like I said, without going back at least a year. So for damage control, I would say, these highs here, right? So I would take my marker for damage control, and anything that breaks that level there is where we're going to start executing damage control. And we'll see where we want to take a position there short as our first DC position before the main level, which is up there. Okay, so that looks like it's planned out. We've got our targets. We've got where we're going to go in. Let's see what happens.